The UK is the world's second largest global importer of dairy by value, the majority of which is currently imported duty-free from the European Union. And so the gold standard FTA that the UK and New Zealand signed earlier this year provides a level playing field for New Zealand dairy exporters with our European competitors. And so we really appreciate the hard work and effort that has gone into securing this high quality outcome. And from our perspective, the UK is a really sophisticated market with customers and consumers in those high value segments who are willing to pay for New Zealand provenance, our sustainability credentials, and our innovation. That said, with flat to declining milk production in New Zealand, we still have an interest in maintaining a balance across our strategic portfolio and continuing to meet growing demand for dairy across the 130 markets in which we operate. So the FTA provides for full free trade across all dairy products over 5 years after entry into force, with some transitional quotas for cheese and butter over that time. So we operate an integrated global business, providing high quality, sustainable dairy nutrition to our ingredients, food service and consumer customers. And we're continuing to explore potential opportunities in the UK market across each of these channels, including where we can continue to build on our existing partnerships or develop new ones. A key factor will be how quickly the agreement enters into force. So we understand that both the UK and New Zealand governments have commenced their domestic ratification procedures, and we encourage both to complete these as quickly as possible so that businesses in both the UK and New Zealand can utilise the opportunities presented by this, truly historic and high quality agreement. Yeah, so it's a good question. New Zealand dairy farmers actually lead the world by producing high quality milk with a low carbon footprint. We currently have around 1/3 of the carbon footprint when compared to the global average. And consumers in markets like the UK are increasingly prepared to pay a premium for New Zealand products with strong sustainability and provenance credentials. So when we look at our emissions across our supply chain, currently only around 1% of our total emissions derive from distribution. And what this reflects is that shipping is actually an incredibly efficient method for transporting goods. I guess kind of while we know we have a good story to tell, we also know that we can't be complacent. We have an aspiration to be net zero carbon by 2050, and as a business are looking to invest around $1 billion in sustainability initiatives over the next decade to ensure that we can maintain that position in terms of a supplier of low carbon, high quality dairy. I think we've had a lot of engagement throughout the negotiations and afterwards with our key partners in the UK, including in the UK agricultural and dairy sector. And I think there are a lot of areas of mutual interest that are ripe for cooperation. We both are looking at how we respond to environmental pressures and continue to reduce the environmental impacts of dairying. So a lot of a kind of opportunity for collaboration in those areas. And I think one of the sort of dynamics we're seeing globally is that dairy supply and demand is relatively balanced. So we are seeing global dairy consumption grow at around 2% per year, while supply in markets like New Zealand, the European Union and Australia really quite constrained. So in New Zealand, the outlook is for flat to declining milk production. So there's actually a lot of opportunity, I think, for both New Zealand and the UK to look at where we can share expertise around operating in global export markets, because we are seeing that consumption continuing to grow over time. So from a Fonterra perspective, we were very disappointed with the outcomes in the NZ-EU FTA. While there are some small pockets of additional access under that agreement, by and large, access for our key products will remain highly constrained for the foreseeable future, even once that agreement enters into force. And so I think from our perspective, when we look at the two agreements, with the EU reflecting that really limited access, and the UK where we move to full free trade conditions over 5 years, increasingly I think you'll see our focus on the UK market as a result of that agreement.